Hello everyone, welcome to my channel again. So today I want to introduce two models. The first model is the circular flow of dollars through the economy, which is the graph you see on the screen. So, what is this figure about? This figure is a more realistic version of the circular flow diagram found in chapter 2. Each yellow box represents an economic actor, households, firms, and governments. Each blue box represents a type of market. The markets for goods and services, the market for factors of production, and financial markets. The green arrows show the flow of dollars among the economic actors through the three types of market. So first we need to assume what? We assume that first the market use dollar as its main currency. So I think I have already introduced a graph about when an economy only sell bread, then the relationship between firms and households. But now this is absolutely a more realistic version of it. So what is it? So first, we still have firms and households. However, we add the role of government. And the second model I will introduce have far more factors than this. But in order to, comprehend that, we must need to first know what this is and understand this. So first, where the money comes from. The money comes from the money supply which is being printed by the government. But wherever we start looking at the graph, for example, just look at the top left corner, which is markets for factors of production. So markets for factors of production. For example, labor, they will receive income. So if labor received income, then what will it do? So after labor was received the income, they would save the income to the households. Although you may still concerned that probably the labor and the households is almost the same thing or the same one, but it actually do not matter because although you may say they are the same person, they can be because they have acts like two roles. First is for the markets for factors of production. The second one is households. So after they receive income, they will have three ways. First, save this money, right? Despite for save this money, then we have taxes, which is first for corporation, they have corporation tax. But however, after corporation, they will still have tax for income tax, no matter progressive or regressive. So after that, we also have consumption because either you save them or you being charged by tax, but still we could use it as consumption. So first, we will introduce after the private saving. We will, this money go to the financial markets. So first thing, if you private save in the bank, then you may say how bank works. The bank only works when they need to have profit. So the profit is obtained when they give others bank loan. So the bank loan for the companies are being considered as investments. They have investment for all kinds of things like technology and education. And the second main cases is you have saving, but you directly invest as a businesses, and still it goes to investment. Secondly, you pay tax. You pay income tax. You pay some rates, renting rates. Only rates. So as for government, they receive a part of tax. So the government will have, as for the government, they will have some public saving, which is which is used as a leverage whenever there are some financial crisis, and most of things they are used as government spending, which is also known as government purchases. So government spending would go to the markets for goods and services, so where the consumption also goes to it. So investment also go to market, for example, businesses. Then businesses after receive their revenue, receive their subsidies, receive their investments, they will keep their output at a high level. So these outputs, these firms' revenue comes to firm. So the firm, finally, they have to factor payments. They need to pay for labor, they need to pay for enterprise, they need to pay for land and so on. And it finally becomes a closed circuit. Thank you all for listening. Have a nice day.